Hey everyone, welcome back to Corporate Decoder, the place where we dissect those Wall Street documents to find the hidden stories. And today we're looking at Tian Ruixiang Holdings Limited's latest filing, an amendment to a Form 6K that's got some pretty interesting updates, especially about an acquisition they made. So what's the big news? Well, Tian Ruixiang Holdings recently bought another company called Ucare Inc. And this filing is to give us the financial picture of that deal and its aftermath. Think of it as the official financial report card for this new business combination. This document is actually an amendment to a previous filing, specifically for something called the UC acquisition and also an update to their semi-annual report. It's like they're adding more chapters to their financial story for the period. The main event here is the financial information related to acquiring Ucare. Remember, when a company buys another company, especially a significant one, there are strict rules about reporting the financials of the acquired company and how it all combines. It's to make sure investors have a clear picture of the new, larger entity. Tian Ruixiang, or TRX as they sometimes call themselves, officially bought Ucare back on June 30th of this year. This acquisition was a big deal, and they've provided the audited financial statements for Ucare for the years ending in October 2023 and 25, and then combined financial information showing what the new larger company looks like potentially. These are what they call pro forma combined financial statements. Basically, it's a what-if scenario showing how the two companies would have performed together if they had been combined earlier. It's a critical tool for understanding the immediate financial impact of the deal. Now let's dig into some of the numbers they've shared. We're seeing financial statements for Ucare itself. They've provided data for October of 2024 and then a more recent snapshot from April 2025. This gives us a glimpse into Ucare's performance right before and shortly after it became part of Tian Ruixiang. The really important part for us is how these companies are doing together. Think of it like this. We have the financial health of Ucare, and then we see how that health is integrated into Tian Ruixiang. Looking at retained earnings for the period ending April 30, 2025, we see a figure. This represents the accumulated profits of the company that haven't been paid out as dividends. An increase here is generally a good sign, indicating the company is reinvesting its earnings effectively. Then there are receivables from stockholders. This is money that the company is owed by its owners or related parties. It's important to keep an eye on this to ensure it doesn't balloon, as it could indicate that profits are being taken out of the business by owners rather than reinvested for growth. Additional paid-in capital is another key metric. This is the amount investors have paid for stock above its par value. A rising trend here often means the company is successfully raising capital from investors, which is good for funding future operations and growth. And finally, accumulated other comprehensive income. This covers gains and losses that haven't been included in net income yet, like foreign currency translation adjustments. It's a bit more technical, but still affects the overall equity picture. There are also details about specific bank dealings, like money due from certain branches of banks. These are important for understanding short-term liabilities and cash flow management, showing where the company's money is and when it's expected back. Interestingly, the filing also touches on minimum and maximum possibilities for certain company metrics. This often relates to scenarios like share incentive plans or contractual obligations, where there's a range of outcomes depending on various factors. The share incentive plan from 2021 is mentioned quite a bit, especially in relation to different periods like 2023 to 2025. This suggests that the company is actively using stock-based compensation to incentivize its employees and management, which is a common practice. We can see some figures here that relate to this plan. For instance, the mention of these plans in conjunction with specific dates like November 1st, 2024 and April 30th, 2025 suggests these are reporting periods tied to the stock options or awards granted under that plan. Then there are references to services like Service Other. This is a category that can encompass a broad range of services the company might offer, and seeing it reported over different periods helps us understand the company's revenue streams beyond its core product or software offerings. And of course, software services is a major component. The filing lays out figures for these services across different reporting intervals, such as the year ending October 2023, the year ending October 2024, and even projections or periods leading up to April 2024, and even projections or periods leading up to April 2025. This shows us how the software services part of the business is evolving. Closely related is software as a service or SaaS. Similar to software services, we see data points for these over a few periods. The clarity around SaaS revenue is vital because it's a recurring revenue model that investors often favor for its predictability. The term related party pops up frequently, often tied to specific individuals like Wei Ju or entities such as Xiamen Haiying. This refers to transactions or balances with individuals or companies that have a close relationship with Tian Ruixiang. It's important to monitor these relationships to ensure they are conducted at arm's length and don't obscure the true financial picture. For example, we see related party transactions and balances reported for both October 2023 and October 2024, and also looking ahead towards April 2025. This suggests ongoing business dealings with these related parties. The company also reports on software and software development cost. This is a significant investment area for tech companies. Seeing how much they are spending on developing new software or improving existing products gives us insight into their future growth strategy and commitment to innovation. And then there's office equipment. While it might sound minor, tracking spending on fixed assets like office equipment can give clues about expansion. Are they buying more desks and computers because they're hiring more people or setting up new offices? The mention of Ucare 8T member likely refers to a specific subsidiary or operational unit of Ucare in Hong Kong. This detail suggests a more granular look at how the acquired business is structured and reported within the consolidated financial statements. We also see references to countries, specifically China represented by country CN. This confirms the company's primary operating base and where a significant portion of its transactions and assets are located, which is crucial for understanding its operating environment and any country-specific risks. There are several entries related to dealings with the Bank of Beijing, particularly a specific branch and a due date in December 2024. These are likely notes or loans, and tracking them helps understand the company's debt structure and repayment obligations. The filing also refers to letter of credit member. A letter of credit is a guarantee from a bank that a buyer's payment will be received on time and in the correct amount. This indicates that the company might be using letters of credit for certain transactions, perhaps for international trade or to secure specific agreements. Common stock figures are also present. This is the basic stock of a company representing ownership. We see this reported for different year ends like October 2022, 2023, and 2024, showing the company's stock structure over time. And then we have references to the United States denoted as country US. This shows that the company also has operations or interests in the US, which can diversify its market presence, but also expose it to different regulatory and economic environments. The term subsequent event flags important happenings that occur after the balance sheet date, but before the financial statements are issued. This is critical because it gives investors information about major developments that could significantly impact the company's financial position, even if they happened after the reporting period officially ended. Here it refers to events up to August 2025. The filing consistently refers to Ucare Inc. as a key entity, especially in relation to the acquisition. This reinforces that Ucare is a major part of the current reporting and future strategy. We see stock option member mentioned in relation to periods up to April 2025 and then looking forward to April 2025. This confirms that stock options are a significant part of the compensation structure, affecting potential dilution for existing shareholders and aligning employee interests with company performance. And then there's convertible preferred stock. This is a type of stock that can be converted into a fixed number of common shares at certain times. It often comes with certain privileges over common stock. And seeing how this is reported indicates another layer of the company's capital structure and potential future stock issuance. Now let's look at the overall picture. Tian Ruixiang's acquisition of Ucare is a strategic move to expand its business. The financial data provided gives us a snapshot of how this integration is progressing. An increase in common stock and additional paid-in capital for the period ending April 2025 suggests the company is perhaps issuing more shares to finance this growth or related activities. The repeated mentions of software services and SaaS are positive, indicating the company is focused on high-growth areas of technology. However, the ongoing reporting on related party transactions requires careful observation. While not inherently bad, it's crucial that these dealings are transparent and fair to all stakeholders. The inclusion of subsequent events up to August 2025, especially regarding Ucare and potential common Class A shares, signals that significant changes are still unfolding. This means investors need to stay very alert as the situation continues to evolve rapidly after the acquisition. In conclusion, Tian Ruixiang is clearly in a growth phase with this Ucare acquisition. The company is investing in its core software business and managing its capital structure. The key for investors will be to monitor how well these combined entities integrate and deliver on revenue growth and profitability, while paying close attention to those related party transactions for any potential red flags. It's a dynamic situation with potential for significant upside if execution is strong, but also risks associated with integrating a new business and managing diverse financial relationships. Well, back to for a great term Archins for any potential red flags. It's a dynamic situation with potential for significant upside if execution is strong, but also risks associated with integrating a new business and managing diverse financial relationships. What do you all think about Tian Ruixiang's move to acquire Ucare and the financial picture they've presented? Which part of this acquisition story catches your eye the most? Let me know in the comments below. If you found this deep dive helpful, give this video a thumbs up and be sure to subscribe for more corporate breakdowns. And don't forget to join our Discord community for more discussions and insights. Thanks for watching, and I'll see you in the next one.